Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's great to have you back for another deep dive into the wild world of Wall Street. Today, we've got a packed show with geopolitical tensions shaking things up, mixed signals from the indexes, and some standout movers in the market. Whether you're in it for the long haul or keeping an eye on short-term plays, we'll break it all down with a focus on building lasting wealth. So let's jump right in. First up, the big story dominating headlines is the ongoing U.S.-Iran conflict. President Trump's recent speech has dashed hopes for a quick resolution, with hawkish rhetoric pushing oil prices sky high and reigniting fears of stagflation. We're seeing crude oil surge past significant levels, and this energy shock is rippling through markets globally. For long-term investors, this kind of volatility can be a stress test for your portfolio. Think about how exposed you are to energy costs or supply chain disruptions. In the short term, though, it's creating uncertainty, with investors bracing for a bumpy ride over the upcoming long weekend. Let's check the pulse of the market with today's index performance. It's a mixed bag out there. The Dow Jones took a hit, slipping a bit, while the Nasdaq and S&P 500 managed to edge up slightly. The Russell 2000, representing smaller caps, showed some strength with a decent gain, and the VIX, our fear gauge, pulled back a little, suggesting a slight easing of panic. But don't get too comfortable. Market sentiment is still in extreme fear territory, and with geopolitical risks looming, we could see sharp swings in the near term. For long-term players, these dips might be buying opportunities, but keep your risk management tight. Now, let's spotlight some of the day's big winners among large-cap stocks. Tech is showing resilience with names like Intel and Advanced Micro Devices leading the charge with solid gains. Netflix also popped nicely, possibly fueled by anticipation for upcoming events and partnerships. Even in a shaky market, these companies are proving their staying power, especially in sectors tied to innovation like AI and streaming. For long-term investors, these could be core holdings to weather broader storms. On the flip side, we've got some heavy hitters taking a beating today. Tesla stumbled hard, dropping significantly after disappointing delivery numbers for the first quarter. Definitely a short-term concern for growth-focused folks, though their long-term EV story still holds potential. Other names like ASML and GE Aerospace also saw notable declines, reflecting broader pressures in tech and industrials. These pullbacks could be a chance to reassess entry points if you believe in their fundamentals over the next decade. Looking at the market movers shaking things up, Nvidia remains a hot topic with high trading volume, holding steady with a slight uptick. Amazon and Tesla are also in the spotlight, though moving in opposite directions. Amazon slightly down while Tesla's struggles continue to draw attention. Palantir and Micron are worth a mention too, with Palantir gaining ground as a potential AI play. These names are driving a lot of the day's action, and for long-term investors, they represent key sectors like tech and data analytics that could define the next market cycle. Diving into the most active stocks by volume, Nvidia and Tesla are unsurprisingly at the top, reflecting intense investor interest. Intel also saw huge trading activity, likely tied to its recent AI advancements, while names like Nike and Snap saw significant action, but with mixed results. High volume often signals short-term momentum or sentiment shifts, so keep an eye on these for potential quick plays, but always tie it back to your long-term strategy. Don't chase the noise. Shifting gears to earnings, we've got a busy week ahead with some notable names reporting. Keep an eye on companies like Nike and Lamb Weston Holdings, as their results could give us clues about consumer spending and supply chain health. Delta Airlines is also on deck next week, and with fuel costs soaring due to the Iran conflict, their commentary on margins will be critical. These reports often move markets in the short term, but for us long-term investors, they're a window into enduring trends like consumer behavior and operational resilience. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into what companies are saying about the future. Let's take a quick look at the top large-cap gainers over the past week. Garmin led the pack with an impressive surge, followed by Lumentum Holdings and AppLovin, both riding strong momentum likely tied to tech and AI demand. Shopify and Occidental Petroleum also made the list, showing strength in e-commerce and energy. These weekly movers can highlight sectors gaining traction, which is useful for spotting long-term themes to build around. Conversely, the past week's biggest losers include Genuine Parts Company, down sharply, alongside Rivian Automotive and Blue Owl Capital, both facing significant headwinds. Okta and Bridge Biopharma also took hits, reflecting challenges in tech and biotech. For long-term investors, these declines might signal undervalued opportunities, but do your homework on whether the fundamentals support a recovery. Wrapping up with sector performance over the week, industrials and consumer cyclical stocks topped the charts with solid gains, likely benefiting from pockets of economic resilience. Energy also showed strength, no surprise given the oil price spike. These sector moves can guide your long-term allocation. Think about overweighting areas with sustained momentum while keeping diversification in mind. On the weaker end, healthcare lagged behind with a noticeable dip, alongside utilities and financial services showing softer performance. These underperforming sectors might face short-term pressures from rising costs or policy uncertainty, but they could also present contrarian plays for patient investors looking out over the next few years. Tying it all together, the broader market is walking a tightrope right now. With inflation fears creeping back, thanks to oil-driven pressures, and the Fed unlikely to cut rates soon, we're in a tricky spot. Add in the geopolitical wildcard of the Iran conflict, and it's clear why sentiment is shaky. For long-term investors, this is a reminder to focus on quality, companies with strong balance sheets and pricing power. Short-term volatility might sting, but it often creates the best entry points for building wealth over decades. One last thought on tech-heavy indexes like the Nasdaq, which showed some grit today. Despite layoffs and AI-driven job shifts in the sector, there's still underlying strength in fundamentals for many tech giants. As a long-term investor, consider how much of your portfolio is exposed to innovation-driven growth, especially with AI CapEx expected to boom in the coming years. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates, in-depth summaries, and exclusive SWOT analyses to help you navigate these choppy waters. Hit that like button, subscribe, and join our community to stay ahead of the game. We'll see you tomorrow for more insights to build your wealth over the long haul. Take care.